Right, guys. Welcome to Market Structure 104. Today we'll be talking about support and resistance. So I said in our next class we'll be talking about support and resistance. So that will be our topic for today. Market Structure 104. Okay, Market Structure 104. So we're basically learning today the idea of support and resistance, what is support and resistance, and all this kind of stuff. Okay, I'll be our topic for today. Support and resistance. Right. Before I go into that, I just wanted to say one or two things. We offer a beginner's course and a master course. The beginner's course is for people that are new to trading. Beginner's course is for people that are new to trading, or those that don't have a good background on trading. There are so many information on trading you can find online on YouTube and all those things. But what we do is that we filter those information and tell you only what is necessary. The reason why many people blow accounts is because they want to try everything. They try this, they try that, and you don't really have the time to try all those things. What we do is that we give you the information that is relevant, what you will not find on books or all those stuff, what we have practiced and what we have found out by our hard work and consistency. If you can see in our previous videos, you can see that we share things that you would not really find on any book or other stuff, but we share it here because of the relevance of that. So we offer a beginner's course, and I said in the previous video, it goes for only $25. It goes for only $25. And in this beginner's course, we'll be teaching you the basics of Forex, basics of Forex. We're teaching you the how to calculate lot sizes. Teaching how to calculate lot sizes. How to calculate lot sizes. I'll be teaching you how to risk management. I'll be teaching you the tricks and basics of market structure. Believe me, most of the things I share here are just a tip of the iceberg of what you'll be learning in the beginner's course when you register. There are so many things I'll be opening your eyes to. I'll be teaching you how to analyze the market like a pro, how to analyze the market like. So there are so many things I may not be able to remember here, but as the course goes on, I'll open your eyes to a lot of things. I'll teach you how to analyze the market like a pro, how to identify market traps and high probability setups. What are high probability setups? These are the setups that you can use any lot size you want because you are very sure it's going to go your way. So teaching you how to identify those market setups that you can use big lot sizes and use very little stop losses and still maximize it. I will tell you how to enter the market and how to leave the market. I'll tell you best entries and exits. So this is what we'll be covering in the beginners course. So many things that I cannot really remember to mention it here. So please do well to take our beginners course. It's very cheap. Many people charge $100 on that, but I decided to make it 25 just to make it affordable. And then I'll be teaching on synthetic indices, the stuff you don't know about the synthetic indices. I've taken your static indices and all of that. So if you're interested, just hit the link below. I will drop me a WhatsApp link just to take you to where you will register. So if you're interested, just hit the link in the description of or send an email to electronglobal@gmail.com. So this is it for our beginners course. But then if you're interested in the master's course, the master's course, the master course, that one it costs just $70. This is where we'll be opening your eyes to so many things. The master course will be covering um, the Fibonacci retracement, we're covering profitable trading patterns, we'll cover divergence, we'll cover smart money concept, we'll cover so many things that will make your trading as now so equipped. When you finish this master course, you'll be able to beat any kind of market, no matter what kind of market it is. So this master course, I wouldn't want to start listing what and what will be there because of time. I need to go into the video for today. So the master cost $70. But if you want both of them, it costs $60. So and you save, if you register for both of them, you're saving $35. Yes, you're saving $35. Saving $35 if you want to register for both of them at once, the beginners and the master course, you're saving $35. So instead of paying 70 and 25, which is 95, you can pay $6 for both of them and save $35. So that is it about that. Just hit my link below or the stuff, the email to know more about this. So let's go to the topic for today. Let's go into the topic for today. Today we're talking about some support and resistance. Support and resistance. So let's go straight to the topic for today. Support and resistance. A support is where buyers took over the market. Resistance is where sellers took over the market. So this is a simple definition of um, support and resistance. The support is where the buyers took over the market, and the resistance is where the sellers took over the market. Um, for instance, you um, see the market buying, just buying, and then suddenly comes down. This point, sorry, this this point here where the market stopped buying. This point here where the market stopped buying, somewhere around there. This point is called a resistance. So it's a point where the market, the sellers took over the market. It's called the resistance. It's called the resistance. Okay. I'm going to use a call out. So that point is called the resistance. We call it as the market. Sellers took over the market. It's called the resistance. This is where the sellers took over the market. Then in a bullish, in a bearish situation, see the market do this and then shoot back up. This point right here, this point right here, where the market turned, you can call this point around here, you can call it a support. A support. This is support. Okay, that is a support where the market turned and started buying. I want to make a point that there are support and resistance in every time frame, but the most important support and resistance are those on bigger time frames. You can ignore those smaller ones because they can easily break. The most important resistance or support levels are those on higher time frames. So the most important ones are the ones on higher time frames. You don't need to be looking out for support on 15 minutes or on 1 minute, or those ones that can easily break. They can easily break and stop you out. So you're looking for those on time frames like the 4 hour, the 4 hour, uh the 4 hour. You're looking for 4 hour, the daily, the D1, looking for weekly, and the month, because sometimes 1 hour. Okay, so those are the basic stuffs. Okay, so those are the ones we are looking out for. These are the ones you should be looking out for: the 4 hour, the daily, the weekly, the monthly, and sometimes the 1 hour. So that is it. Let us look at real charts to be able to understand this thing perfectly. Let's look at real charts. Let's also look at real charts to understand this thing better. Okay, let's remove all this so we can go to our real chart and understand this thing better. This is a very simple class. I don't want to make it so okay or difficult. I just want to make it very easy so that you understand what we are doing here. It's a very simple concept. Anybody can do it. We'll be using let's use currency pairs for this illustration. Let's look at let's use this. No. Let's use forex. Let's use Australian dollars against USD. Let's use this to understand this concept perfectly. All right. Now, this is a chart. This is a 4 hour chart. Now, if you look at this market, the market was selling and came to this point here, and then it shot up. You see that the market came to this same point here, it shot up. And now you see that it broke here at this point. So now we can see this point as this level right here. You can just mark this level. Remember that I want to make a point that a support is not a line, it's an area. Let me just make that, let me just iterate that it's not a support, it's not a line, it's not a line per se, it's an area. It's an area. A resistance, this is a mistake many people make. They think it's just one straight line, or any little thing they think is broken, all of that is It's not a number. So a resistance of support is not a number, it is an area. Okay, it's not a number, it is an area. So this area is our support area. We can call this area our support because we saw price turning there. Price turning there. So this is the basic one. You want to use the bigger time frames, not use 15 minutes. This is a 4-hour support because you saw price breaking there, and now you can see that it has broken. Most likely, we may see this market do something. Maybe may do something like this, just maybe just drop from here to the next support. The next support is, oh God, what is this? The next support is somewhere around here because this is where there was a very strong bullish push. So we may see price falling to somewhere around here, somewhere around here. This is the next support because it broke here. So this place has become a resistance. I want to point out something that a broken support becomes a resistance and the broken resistance becomes a support. So anytime a resistance breaks, it becomes a support. I don't hope you are following. This is a point that you should note. A broken support becomes a resistance and vice versa. A broken support becomes a resistance and vice versa. So when when support broke, it has now become a resistance. So most likely, we may see euro-dollar fall down to this point, or maybe somewhere and some kind of support here. But I believe it's going to fall maybe to somewhere here. So now, based on the resistance story, we say that this is where sellers come into the market. So we can look at this point. We saw something like a rejection at this level. This is a rejection. This is a rejection. So we can call this point right here a resistance because we see price turning there. So always take your trades from the bigger time frame support or resistance. Avoid 15 minutes, avoid 30 minutes, and all those things. Use the bigger time frames, the support and resistance on the bigger time frames to make your entries. Always wait for price to get to those bigger time frames. It's not just any kind of support. This one that you saw a turning in the 4-hour or in the 1 hour. So this point is a resistance. This point right here is a resistance because we saw price turning there. I told you that an A. Look at how price pushed in as if it broke, but still came down. This is the resistance. Now, I want to say is that always look at before you make your entries, look out for the candlestick formation at the resistance. You don't just enter like that. For instance, look at how price just broke. If you just bought it, would have been stopped out. But what you do is that you wait for rejections. Look at this level here. The price came here. You saw this doji. You saw an engulfing candle. You saw a pin bar. This was a good signal to take your buy. You have bought it and bought it to the next resistance. Price moves from one support to the next resistance. And the price cannot break here, it's going to go to the next resistance. So if I saw this pin bar, I would have taken my buy and put my stops maybe below this week, and I would have taken this buy to this resistance. So resistance are good points to take your profits, and support are good points to take your profits. Some people call it demand zone, some people call it supply zone. All these things basically mean the same thing, order block, all those things. But we're talking about maybe order block in our next class. I'm talking extensively about order blocks and try to relate it to support and resistance. But the most important thing to notice that the turning points is just where you should know. You don't really need to, you can call it any name you want, but just know that the market turned. Always take your trades at a bigger time frame resistance or support. Avoid 15 minutes, avoid 5 minutes. Use the bigger time frame like 4 hour, 1 hour, and wait for a confirmation. Always wait for a confirmation. Don't just enter because it's surprise and going to a support. Always wait for a confirmation at a support or resistance. Always wait at support slash resistance levels. Always wait for confirmation. Always wait for confirmation. Don't just enter because the surprise going to support all of that. Always wait for confirmation, and the confirmations are the candlestick patterns. Always wait for a confirmation at the support or resistance level. Always wait for a confirmation before you make your trade. Then you look at the candlestick pattern, and most important, you look for a break of structure. So in our next video, we'll be talking about how to combine support and resistance with making entries. That will be in our next video. I don't want to make this video so lengthy. This is just the introduction to support and resistance. Then in our next class, we'll be talking about that. Next, I don't want to make this video so lengthy so that it can be really understandable. Making the most out of support resistance. In our next class, I'm teaching you how to make the most out of support and resistance. I will tell you when to stay away from a support and a resistance, when it's likely going to break, the things you should look at for when price comes to support. You want to see something, the kind of candlestick patterns you should see, the kind of movements, the movement. I will tell you some indicators to use to help you to know when this thing is going to turn. Because I say, look at if you took your buy, it would have been stopped out. So in our next class, we'll be teaching you how to make the most out of support and resistance, how to make the most out of it so that you don't just get stopped out. Look at this now. Look how price came to this resistance and just stopped everybody that tried to buy out. So I'll tell you when to enter at the resistance or support. Okay. So that will be in our next class. Please, I say something if you want to register for our beginners course, because I can't mention some things here because I reserve it for the people that will register for our mentorship and our teachings. So it goes for just $25. We will teach you the basics of market research, and everything I'm teaching here will be covered in that. I'm teaching you support and resistance, all those things. Why the master class, where that's why we'll be going deeper. We'll be going into Fibonacci, divergences, all those concepts, harmonics, smart money, institution, mitigation, imbalances, all those are part of our master class. But the basics of this beginner course is just so that you can learn how to analyze the market yourself. You don't need to be asking yourself, what is the market doing? So I encourage you to just hit the link in our description and register immediately so we can start taking you through this teaching. So that will be all for now. Stay hooked and watch out for our next video. All right. Thanks.